Hey traders, hope you guys are good and welcome to my learning space. If you're new to this channel, please do me a favor, hit the subscribe button, turn on the notification bell so that you can be notified whenever I upload a new video. If you're a returning subscriber, welcome back and I hope you enjoy today's presentation. So in today's video, the topic is market efficiency and inefficiency. And as you can see, the video is very short because I feel like to an extent we covered this in previous videos. To be more specific, the video where I talked about spotting imbalances in the market. So when we're talking about efficiency and inefficiency in the market, we referring to balance. So the idea behind efficiency and inefficiency, especially in the context of price action trading, is that when there's efficiency, price is balanced, right? And then when there's inefficiency, there's an imbalance, right? And the best way to identify efficiency and inefficiency in the market is a scenario where you have three candlesticks. So this on the left will be efficiency. This on the right will represent inefficiency. So yes, basically when you have efficiency, this is what happens. You have open, high, open here, high, close, right? And the idea is that the high of this candlestick and the low of this candlestick meet, right? So this imbalance over here that was created by a bullish push is essentially accounted for. And this goes on and on. So just for a side note, whenever you have a scenario in the market where wicks meet, you have efficiency. Why? Because as price is going up in a strong manner, the candlesticks before and after it account for it and take liquidity from the previous session, right? Now, whenever you have a scenario where these two areas, which is the high and the low of the next candlestick, don't meet, we talk about escape of liquidity, right? Now, the market runs in such a way that eventually there will be balance in the market. So, like here, let's say this was your first candlestick, this is your second, this is your third. And let's assume that these are Marubozu candlesticks, meaning they don't have large wicks, but then they consist of large bodies. Essentially, there's a gap here. And we talked about it in great detail in that video. So there's a gap here because the high and the low of these candlesticks don't meet. The market moves in such a way into this area to fetch liquidity and then move. So this is the concept of efficiency and inefficiency. Now, why is this important? In the video where I talked about identifying the best supply and demand areas, one of the things that I mentioned in that video is that you need a strong departure away from a potential supply and demand areas. Market efficiency, right, often represents a weak departure away from a level. So most of the time, when the market retests, it most likely breaks, especially if the market reverses in or with strong candlesticks, right? But with here, because there are a lot of unfilled orders, right? When the market comes back to test, the market usually reverses. And one other thing that you need to note, inefficiency most of the time occurs when you were in a state of a correction. I want to remove everything here. Right. So let's assume that you had a state of a correction and the market moved away, right, from this with a strong impulsive push, right? Uh, you had a break of structure, right? Let's say you had an order block. Most of the time, if you needed to find an entry, you choose your fibs. So as soon as the market retests to fetch an order block, you draw your fibs, and at 50% and 61.8%, that's where you draw your fib. And because this is where your imbalance is, the market usually goes back to that area and then move on to further or to the direction that it was supposed to go into. So that's just the basic idea of it. I hope you get the gist of this idea. And I assure you that if you look also at the video that I uploaded on imbalances, this will make sense. But especially I'm talking about this in the context of the video that I uploaded on Monday, which was talking market breakdown. I'll post the link to it. But then in the context of what I was seeing on Euro USD. And by the way, if you checked out that video, you'd also know that we are in profit. I'll post the results to that analysis right here. But yeah, this is also a concept that you need to understand: market efficiency and inefficiency. I'll see you again in another video. For now, that's all I have for today. Hope it made sense. If you have questions, make sure that you engage with me. And yeah, see you again in another video. Peace.